mode.
Good day, everyone. Well, the Fed, as we know, announced they're sticking to more or less the status quo. All 10 Fed governors were unanimous in their decision to keep rates at historically low levels. Yellen's a dove and has indicated that it's data dependent on whether on when the Fed decides to raise rates. Of course, that means they need to see ample evidence that the economy is turning a corner, and so far such evidence has been scant. For many months now, the Fed has kind of repeated like a broken record that the economy is turning a corner, and yet it really isn't. But they've got to keep up that Fed speak. They've got to keep up appearances and the optimism that all this money printing that's gone on since 2009 will have a pot of gold at the end of the rainbow. Not this fake stuff that they keep printing, fake gold. So essentially, we are going to see potentially low rates for much longer than expected. Some various notable voices out there have echoed that sentiment that rates would be low, very low, for out to potentially 2016. We're coming to the midpoint of 2015. And essentially, with all this money printing that's going on around the world, that does prop up the markets. Money's got to flow somewhere, and the U.S. market is the tallest standing midget, which is why you see the performance you have in the U.S. market compared to, say, European markets or the British market, Japan, etc. You've got a consistency in this very rough and loose uptrend that we've seen over the last few years. And right now, if you look at the Nasdaq here, let's go to a weekly on it. You can see that this loose outtrend since December, the market can't really get a rally going. It's a very wide and loose, sloppy kind of formation, and that makes timing the markets nearly impossible. But it makes it difficult to trade as well. However, we have seen our share of pocket pivots and viable gap ups work, provided you're quick to take your profits and you cut your losses quick. And then, when you get these gains that are, say 8% gains here, 6%, 10%, it adds up. And this power of compounding can work to your advantage, even in this environment. Now, I wanted to talk about a number of names that have become actionable over the last couple of weeks. Let's start with this VRX. And that went on the actionable list just yesterday, and then today we're seeing a nice performance because of the earnings report that came out yesterday. And so far, if you've got a position in this, so far so good. But if this stock continues higher and gets ahead of itself, then you might want to take some profits, and that's what we mean by being quick to take some profits. Half or all your position, depending on what happens. We have some stocks that are not faring as well, like this Orly. This is one that had a viable gap up, and now is undercutting that gap up by, I'd say, it's just about almost 2%, back to the top of its base here. And if you've got a position in this and you haven't sold it, I would keep your stops very tight on this one, because if it sinks back into that base, it probably could go all the way back down to its 50-day. If, on the other hand, you've already sold it out because the market's had a little bit of weakness amongst leading stocks in the last few days, then there's nothing wrong with that. You don't have to give a stock any sort of leeway if market conditions don't warrant it. Let's take a look at GIII. That was actionable just a week ago, on the 23rd. But as you can see here, it couldn't hold its own, and has sunk back below the low of the pocket pivot day. Now, in this kind of market environment, in the last few days, you've seen leaders take it on the chin. You don't want to give these stocks much room. You don't want to say, well, I'll wait for it to come back to the 50-day, because in the past that's what it's done and it's bounced. Now, there are two types of traders in the sense of time frames. Well, there's more than that, but in this case, you've got your short-term trader who would be quick and nimble and have already sold it. Maybe they would have sold it on this day because it undercut the low of the pocket pivot day. And there's nothing wrong with doing that, especially given the tough action on the part of leading stocks over the last few days. Then you've got your second type, who's a longer-term type. And again, there's nothing wrong with that. If that's your style, that's fine. It might be a little harder in this market environment to be that way, but nevertheless, you can see rationally that this is a stock that gets support at its 50-day and then bounces. So you might be one of those types of traders who are still sitting on your position. Now, if you made a mistake and you meant to sell it sooner and you're still sitting with the position, there's nothing wrong with holding on to it, because really at this point, if it undercuts the 50-day by really much of anything, then you're out of your position. So from here, your risk level is less than 1%. I guess, in holding it onto the position. Moving along, we've got another stock, HIB, and this is a lesson in being very quick and not asking questions right at the open. It's very important to be watching your stocks at the open, because if this sort of thing happens, the stock had an earnings report that didn't measure up on this day here, and so next day it gaps down, and at that open you sell, no questions. If you're still sitting in this position, then you've got a lot to learn about having a selling discipline. But there's actually a couple other names that had this kind of action, and so you really want to do your best to cut your position when things are not right. I mean, here's another one, GWPH. We first recommended this stock here on this day. It moves up very quickly here, and then we had another pocket pivot on this day right here. So you might have a fairly concentrated position, or you may not. Maybe you took some profits and then you added back on this day. But on this day here, you've got a reversal on above average volume, and you want to be either selling out your position or taking at least half off the table, because right now it's having a little bit of difficulty. It's come up fairly quickly from this first pocket pivot, so it's entitled to doing some backing and filling. Here's another one, SKX. Now this one, we put it on the list on the 23rd. Hold on 1 second. Yeah, is that right? I believe we put it on the list before it had its gap up. I could be wrong on that. But nevertheless, yeah, there was one we put on the list, and then it had a gap up the next day. I don't know if this was one, but regardless, if we put it on the list here, and it, obviously it's not doing anything wrong so far. If we put it on the list here as a viable gap up, it's looking good. So I would just sit tight with this one. Then we had the airline stock, JetBlue, JBLU. And this stock has had some. Let's see, when did we put this one on? This was on the 21st. So right there. And then after we put it on, it went sideways tight. It undercut, and see, that's a scary action in intraday, because it does undercut the base. And if you had sold it there, that's understandable. But then as it comes roaring back on volume, sometimes, and I've had this happen to me, where I had to sell it and then buy it back that same day, watching it like a hawk, because by the time it clears this base, and it did so on appreciable volume, and then it continued higher, so you're sitting on profit for the day, despite having sold it possibly at the low intraday. But it's psychologically very difficult to do, but sometimes that makes for a great winning trade, because the market will challenge you like that every now and then. Now we've got, let's see, moving right along, we've got INFN. And here's a stock that you can see it reported, we issued the pocket pivot a few days before the earnings report, and then it had a high volume reversal after the report came out. So that's a classic situation where at the end of the day, the stock is just not measuring up. It's not doing the right thing. You sell it. You sell it, no questions asked. And then, of course, now it's a bit volatile and it's having some difficulties in there. But presumably you're in cash on this one. CACC. This one is, we put that one on the list on the 21st. And that was on that day. And now it is doing everything right. But the reason I mention it is because it is getting ahead of itself to some extent, and this is the kind of market environment where you might think about taking some of your profits off the table on a day like today. Finally, not finally yet, there's that's a long list that I put together today. It's quite a few interesting names to talk about. We have MNK. This one went on the list after it got support at its 50-day, right here, and it went on the list on this day here. And as you can see, the market had some difficulty, and this stock couldn't really hold support. And if you can see here, it's at the latest, you want to be selling this as it violates its moving average as it goes below the low of that day. So, you want to be very quick about this stuff, because then it opens up a little bit and then it takes out the low of the prior day, and you got to be out because losses can mount very quickly, as you can see. CRTO. This one is kind of a bottom, almost a bottom feeding stock. You can see that it's rounding out, but it's still well off its highs, and it had a pocket pivot on that day, but it was a pretty weak close in the lower half, and then it goes up higher here, so maybe it's going to work, but then it comes right back down. The volume isn't huge, but the price structure is a bit alarming, especially in context of the overall chart. It's sloppy, and it's not a leading stock in terms of price. It's more of a turnaround play in terms of the price. So it's not surprising that this stock, since the pivot point, has been a bit sloppy. And that's part of the risk in playing these kinds of names as opposed to the ones that are just about at new highs, or building a very constructive base where the pocket pivot will allow it to hit to new highs very quickly. So this is a kind of day where you just get out of it and you don't wait for further confirmation on the downside. Then we got MANH, and this one is pretty much a no-brainer. You've got an earnings report. We put it on the list here on this day. 2 days later, the earnings come out. It can't hold muster at all. Reverses on huge volume, so you dump the stock, no questions. HNI, second from the last here. Now this is another example of don't ask questions. On this day, it gaps down at the open, and then it gets cremated. So you got to be selling these stocks when they do that kind of action. These gap downs. These mini gap downs they can be quite treacherous. And finally, we've got HAR, and this is an interesting one because this is a stock where let's see, we put that on the list on the 20th, so we came on the list here, right on that day. Now, earnings came out after this day right here. But you'll notice that the volume picks up on the downside on that day. So knowing that the earnings are coming out the next day, you're not going to sit on this one. Why hold on to it? Sometimes price volume will give you clues the day before the earnings report. So in this case, you're getting a negative clue here. So maybe hold on to a third of your position, whatever, but you got to be selling at least a good part of it when it's giving you that kind of clue. on that negative volume. And sure enough, it gaps lower all the way down to 124 at the open. Today's open. Now it's trying to claw its way back, but you don't want to be in that kind of situation. And with that, I'll turn the mic over to Gil.
Whoops. Let's see here. Just trying to set up my mic here. For some reason, it's gone limp on me, and I don't know why that is. It's one of those Microsoft mics. No, actually, I take that back. It's a Logitech mic, and it swivels up and down, and for some reason, it doesn't want to hold up, meaning it's gone limp on me. Kind of like the market, I think. And I think the market was, from my perspective, the market was already flashing signals of weakness on Friday. And you see the index, the NASDAQ composite here, making a new high. When was that? On Friday? Or, yeah, I guess it was, what's today?
Yeah, it was Friday.
Oh, you went and put the weekly chart up to screw me up. Okay, here's where we were. But yeah, this would have been Friday here. Okay, so that's 5 days ago on the chart. And we can see that, you know, the index is churning around, volume is heavy. And it was it options expiration?
It was, I believe, okay. Yeah.
But you had you know, with all the fanfare of the NASDAQ making an all-time closing high, it still has remained below its all-time intraday high. You saw a negative advanced decline line numbers. You also saw a lot of, starting to see a lot of leaders break down, and you saw Dr. K going through a number of these pocket pivots, and a lot of them aren't working, and that's telling you something. So that information alone is valuable in the sense that it's telling you what's going on in the market underneath the hood. And to me, it was fairly straightforward on Friday. You saw that, and then the last couple of days, or for most of this week, the market's been in a downtrend off the peak. So it's running out of gas, it looks like. Now the question here is, you know, you've come into a spot where you're down near the 50-day moving average here, and you are seeing there's a bid in this market as it comes down, because the indexes, at least the indexes do, they close mid-range or better, but notice how each day it closes up in the upper half here, just below midway, and we'll see where we close today. I'm guessing we might head lower, but we'll see. A lot of stocks have been beaten down. If they can muster rallies in some of these reaction rallies, maybe you get the indexes pushing back to the upside. But I think it's pretty typical in this market. Go ahead, Dr.
Not to interrupt, but it was actually on the week before. That was option expiration.
Okay, so this was just a normal day, big churning day on heavy volume. Negative breadth, the whole world putting on party hats for the NASDAQ making a new all-time closing high. So, you know, you're sort of set up for at least a short-term pullback, so you kind of knew that was coming. Now, what this develops into remains to be seen. But for my money, I don't really see why I need to be long anything. I got one short out right now in data. This one rallied yesterday in the middle of the day. I've been watching it for another move back over 100 as a potentially shortable move based on Livermore's rule in reverse. And CRM, Salesforce, announced that they had hired a banker to evaluate buyout offers. So that sent the other stocks in the group, these cloud data stocks or these cloud software stocks, whatever you want to call them, they all took off. I think Workday also ran up, and it's still pushing up. It is confirmed that they are talking to somebody, and then today somebody came out and said there might be Oracle. So I don't know, with some of these stocks that have moved up in sympathy, does this put them in a position where they might be bought out, or where they just fall by the wayside because the bigger companies just take them out? Because these guys, Workday and I think Data, are much smaller players in the space. But I think they're moving up on speculation that maybe they're buyout candidates too, and I'm not really too clear about that. And when you have that sort of news, that can often be a short selling opportunity. So, you know, I put this thing out this morning. It rallied up to 101 and change. I put it out as a short there. It's coming in a little bit for me. Nothing to write home about, but I've got that one. I think Workday is probably a stronger one than Data. At least it's up today, and Data's down, so that tells me I'm in the right one if one of them is going to work. But we'll see what happens, because you have pulled back to the 50-day on the NASDAQ, and you're in a position to try and bounce. So if you just bust through here, and volume is already running up heavy on the day, and the NASDAQ's down, leading the market down actually today, with the trannies close behind, which is another underlying problem with the market, in my view, that when that's compounded with what's happened to the biotechs recently, the BBH. What's your favorite biotech ETF, Dr. K?
BBH, that's kind of the flagship one.
Okay. So, that's violating the 50-day, making lower lows, so that's looking pretty ugly. Do you have any general thoughts on the biotechs, Dr. K?
Well, when a leading industry group gets hit hard, it often takes time for it to mend. And this one, the BBH as a whole, peaked on March 20th, and they had quite a run. And now they're just trying to regain their footing.
Yeah, they're holding along the lows on the BBH. You can see some of the names, such as Biogen, getting tagged very nicely. Gilead, looking like it might be in a shortable position. Celgene, breaking down to the 200-day. So these are all looking pretty grim. And that's one component in the market that's another. You pile on with everything else, and I think things look pretty negative. Do you have any questions? Let's see. First Solar, someone's asking. Whoops. Here, Dr. K, I'll let you evaluate this one. What's your take on this?
So let's see. We've got First Solar. I always pull it up on the other one as well. Yeah, as far as no, I don't see it as actionable in any sense. I don't like it, and it's pretty sloppy. It had a gap up on the earnings report, but still, it's like that other one. What was it? CRTO. It's going to be a bit sloppy and messy, and it's not the kind of name I like to get involved with. I like cleaner patterns if I'm going to go on the long side. I know everyone sees that this stock has come to its 50-day and is trying to bounce, but again, you're going to have some sloppy patterns. So I don't know if there's a whole lot of upside, from the bounce from this level. And also given the action of a lot of leading stocks, there could be some more tailwinds ahead for stocks themselves. Now, as we all know, which way the indices go can be a different story, because sometimes they're still going to stubbornly start to move higher with all this QE in the system. But for individual names, you got to be very, very careful about, very selective about what you choose. And this, to me, is not doesn't fit that category of being selective.
Yeah, my take on something like this is you had to buy the Bible gap up, and then you get a nice move from there, and then you get a series of breakouts that fail. So again, being early on something and then treating it pretty much as a trade, you get 10, 15, 20% is really the only way you're going to make money on the long side in this market. Thinking you're going to buy a breakout or a pocket pivot, I think, and riding some sort of trend, I think is somewhat naive, and definitely doesn't prove out in this market. It's just very,
look at
very
on that
dicey.
FSLR.
Which one?
Go back to that FSLR.
Last sell first.
Kind of, yeah. There is right here where you had a pocket pivot reversing
Right.
the upside, which is a strong pattern. Oh, it's a strong action, very strong day, and in context with the pattern, it is still a bottom-feeding stock. But taking everything into context, that's not a bad trade. It's not a normal actionable stock that we would recommend, but as you can see, it worked out very well. I mean, it did go sideways, so that might have tried someone's patience actually, and you might have missed a gap up here. But again, there are a lot of issues with buying these bottom feeding patterns. Everything has to set up just right if you're going to play one of these names.
Both First Solar and SunPower announced earnings after the close, so that is correct. So it doesn't look like anybody's expecting anything too exciting here. One that's been doing pretty well since I talked about it last week is Sedge. Remember the unorthodox buy point. It fails on the pocket pivot here and a little flag breakout, and I was actually buying in here, selling it as it moves into the highs here, and it's coming back into the 10-day. Nothing going on now, but again, another trade, and that's what you get in this market. You get trades. If you look at Tesla, for example, that's a great trade off the lows. Here's your sort of a viable gap up, but I'd call this a bottom fishing pocket pivot, and given how volatile Tesla was, I thought that was viable. So I thought it was viable in here on this pullback. You retest on a voodoo pullback. and boom, you get a nice trade for the next week, and now it's back above the 200-day with earnings coming up next week. I think I would sell it and take my profits. Let's see. Someone's asking about silica. These things are beaten down. Great short last year, if you guys recall. But it's in a reaction rally. Is it going to come back? I don't know. I think there's money probably flowing into the oils defensively, so that might be supporting the group right now. I think also oil itself has rallied and off the lows, and so it's bringing up all the oils with them. And I think you could, like I said, you'll see some money flow in there as a defensive move if the market starts getting into trouble. So let's see. OIH. What is OIH? Is that the market vector? Yeah, that's like what I'm talking about. You see this mimics the USO. So other stocks, Twitter, blown to pieces. Again, here's a gap up. If you bought that, you went nowhere. Finally, you could have bought the pocket pivots down here. You had a nice trade, and that was all she wrote. And if you were fast on Wednesday, you actually could have made some pretty decent money hitting Twitter on the short side pretty quickly if you were alert to what was going on. And this company, Celerity, that is able to apparently data mine these earnings reports somehow and release them, they have a fair bit of credibility. That's why this thing got hammered when you saw that come out. And once you could figure out that it was Celerity and you knew what they were all about, you could have just started shorting the stock on the leak of the earnings. And that the earnings turned out to be dead right, the ones they leaked. It'll be interesting to see if somebody determines that this is illegal or something. But it was information that was public information. It was released to the public all at once, and you definitely saw it in the stock price. And so I thought it was hilarious. The thing was trading like 78, and the financial cable TV channels are touting. They halted the thing, and they're touting how now we have human beings at work to do the best thing for the investors, and they halt the stock 78. It opens up near 40 when they reopen it on the NYSE, and they're all tooting their horn about how this is how the markets work and the human intervention. I don't care what they're saying. Somebody got hosed there. If you were smart enough to short it, that was a beautiful thing, but somebody got really hosed there when they halted trading. My personal view, maybe you want to chime in on this, Dr. K, is that companies should announce earnings during regular market hours, and there should be a well-publicized date and time so investors know. And I don't think they should be halting the stocks ahead of earnings or anything. Let it trade. Why do they need to halt before an earnings announcement? It's not like anybody has any information that they can act on. And I think the idea there is just to create these gaps. And I think certain people benefit from those gaps, maybe insiders, maybe big hedge funds. I don't know, but I don't see why they can't announce earnings during market hours and allow it to be an open field, and a liquid market rather than after hours, which tends to be illiquid. So, I don't really understand any of that. Do you have any thoughts on that, Dr. K?
Of course, this kind of manipulation and intervention is something I'm opposed to. As you know, I believe in keeping everything open source and fluid. And these constant interventions by the government rules and things don't bode well. You want to keep things as fluid as you can. And of course that leads us to an entirely different discussion about central banks, but we won't go there.
Well, I'm talking about earnings reports. Should earnings reports be released during market hours so that you have, number one, a liquid market, and number two, all the participants able to quickly exercise their buy and sell orders based on their assessment of the earnings report? Do you think that?
Yeah. But everything's always fractal, and so when the fact that they are not releasing the report during a fluid environment is intervention that should not be that kind of intervention shouldn't exist. Most of the time when you have this kind of intervention, it's not good for the markets, and I think it would be a great step forward if earnings reports were released in a fluid trading environment. And the central bank analogy is equivalent because they're the worst controlling the whole situation, right. And it creates much more massive problems down the road. But yeah, no, I'm with you on doing an earnings release during fluid environents.
Didn't they do that in the old days? Wasn't that how it was done in the old days, like in the 90s, the early 90s, if I recall correctly?
No. I don't remember a time when they released earnings during the day. I think it was always when the market was closed that earnings would get released. There's probably some exceptions to that, but I think in general. I remember, when I was looking at the markets, really looking at the markets in 1990 onward, I don't remember much of a stock earnings being released during the trading day, because then you'd see it in the pattern as well, because of course the price would react immediately to that situation.
You would, yeah, in the past, but I think having a fluid open market, having it occur during that time is the best thing. But anyways, getting back to Twitter, it was touted as the capitalism at work and blah blah blah. And I just think a lot of people got hosed one way or another, but they were probably going to get hosed if they held through earnings anyways. But they got blindsided by the leaking of the information early. So, that was a little bit of drama. But, if you were on it, you could have shorted the stock real quickly. I think at this point I'd be looking for a rally into the 200-day as a shortable rally. So, Facebook's also breaking down. So it's violating the 50-day moving average now. It already failed on the breakout last week. And a huge volume reversal. You're seeing the same exact thing with Apple, and it's breaking down. So, there you have some pretty strong evidence that this market is just not all that good, and you don't really want to be long this market at all. LinkedIn breaking down, violating the 50-day now, going into earnings today. I've been trading this on the short side and getting these little reversals intraday over the last few days, but of course today it breaks down a lot better. On the day I don't want to play it going into earnings, of course. So anyways, GoPro has been coming around. You could have played earnings roulette with this and won, but it's just one of few. And then you get a gap up that looks like a Bible gap up, but it's failing. So that's telling you that you've got problems. Look at Mobileye. This is one, we like this. You got a pocket pivot on a gap up move. It's all the way back to the lows of that gap move, and volume is picking up on the day, I believe. And that doesn't look so hot. So, another one that looked great getting hammered. Cyber now is basically trying to build a real handle. It's got a cup here, so now if it's down this week, you got the first week of a real handle. But earnings are coming up next week, and it's another issue as to whether you want to play that or not. Some people are saying...
back to that, what was it, the Mobileye for a second?
Mobileye?
Yeah.
Go ahead. There it is.
I was just going to say, with this kind of a name, you are picking it up off the bottom, and so when you play this kind of name, and it does what it should do, you sometimes might want to even be selling it on that second day here, and certainly, the stock really can't get going, and it's going to have to back and fill. You got to get rid of it, and you don't want to wait more than 2 days down.
No, now it's pulling in. Maybe it gets some support down in here, maybe not. So, but anyways, let's see. FireEye comes out with earnings after the close. It's just dribbling into the 50-day on light volume. We went through Sedge. Let's see what else we got here. Watching data again. It's failing again at the 100 level. I'm just wondering if this turns into, you got this big sort of, not necessarily pod-like, but it's this big ugly structure. And earnings come out next week, but I'm hoping it breaks down with the market, because I think the rally, it was breaking down yesterday before the CRM news hit, and I'm hoping that just sort of fades away and people realize that data is probably not going to be one company that's bought. They're in a small niche from what I understand, and it's not, the other players all have same product as they do, and it's not that compelling. Someone says, on earnings, I think the assumption is people need time to read the report and think, when in reality the big players have machines that look for keywords and react in milliseconds, presumably after hours as well. Yeah, so the little guy doesn't stand a chance. Somebody points out the market was up on Friday, but 2 out of 3 stocks on my watch list were down. Yeah, and that was sort of giving you a clue as well, because you're seeing what your stocks are doing. And I was sensing that with some of the longs I was holding, like, for instance, as Dr. K pointed out on Mobileye, I have had this, and I could feel it stalling here at the 48 level, and sellers are coming in, but it wasn't heavy volume, but it's running out of volume on the upside here, and then once you pick up volume there, now there's potential for it to cascade, and it did sort of cascade. It increased over the next several days as the stock headed lower, and it's not really getting a bid in here. So Fortinet is holding in tight so far, yeah. But it's now 1, 2, 3, 4, 5, 6, 7 days after this. pocket pivot gap up move, or Bible gap up type move. So the Shack is Shake Shack holding the 10-day. So far it acts pretty well. Taser gapping up today. You know, we kind of missed this one, Dr. K. I think we probably should have put it on here. There's pocket pivots in here, and now it's just going higher. But it's really come into focus in the news, and a lot of that drives this thing with all the stuff going on in Baltimore.
Yeah, it's a news-driven, it's an event-driven stock, which adds to the risk, obviously. But also with this name, it had that gap, huge gap down on huge volume here, and then it tries to get back on its feet. But when a stock has that kind of action, that negative downside action, I often just would rather wait for it to prove itself. I mean, today, you know, it's a bit of a sloppy pattern, so it's not my favorite kind of thing. You know, to get involved with it here after it did, you know, this huge gap down there. Sometimes the pattern stays very volatile and becomes quite hard to trade, and you know, so I try to focus more on the ones that seem to be a little bit more calm, especially in this kind of environment where, you know, we can't get any kind of uptrends going in the major averages. So you know, you go a few days up and then a few days back down, and on the plus side though, with these averages, we are starting to see possibly a tightening in the pattern compared to the way it was from December through February. It seems like there is, yeah, maybe a little bit more quiet coming into the major averages, but we'll have to see. We'll have to see how bad this pullback or what this pullback entails, because the Nasdaq's at its 50-day, the S&P's at its 50-day, and wouldn't be surprised for it. You know, we'll get some support and then we're off to the races. But you know, this market has been loving the sideways move since December, and you know, this sort of action, you know, the only thing that doesn't change is change. So you know, these sideways moves are going to have an endpoint to them, and we will get a trend in one direction or the other soon enough.
Dr. K, here's a question for you. Someone asked, do you think the MDM going to a buy signal was a mistake? Do you anticipate it changing back to a sell or cash in the very near future?
There wasn't a mistake in context of where it went on. Essentially, you know, you had the Fed make its announcement, and it was very quick to reverse its sell signal to a buy, and so it was profitable quite quickly. And then, as we know, yesterday, after the market had a nice rally, it rolled over and closed above mid-bar. So, you know, the MDM is not trying to find fundamental reasons. It's looking at just the technicals of the major averages. It's factoring in we're in a QE environment, and it's also factoring in, you know, there are times when leading stocks, you know, they've gotten hit hard and then they regain their ground and then they go higher. So all that factored in, the market, the model is on a buy signal. It remains on a buy signal. Obviously, it's alert to if there's further breakdown in the major averages and leading stocks can't find their footing, then the model would not stay on a buy signal naturally. But at this juncture, given what the markets have been doing since December, would not be surprised to see markets gain their footing and, you know, then start to tiptoe higher once again.
Let's see, any other questions here? Not that I'm seeing. Let's see, short side. How about eBay? Gap up off the lows and kind of an ugly base. I think it's probably going to fail, so I'm watching that one. F5 is, you know, here's a big head and shoulders. Now it's rallied up in here and it's looking good, okay? And I'm sort of watching this. It already came out with earnings. It reversed back to the upside on a pocket pivot. But watching to see if this fails, just something to keep on your list. VMware is another one that's like that. Sort of a head and shoulders here. Now you're coming up into areas of overhead supply, and it may stall out. You're seeing it do it on the weekly chart somewhat, and this might become shortable up in here. Let me ask about Ambarella. Well, I think you had to close your eyes and buy it right here at the 50-day moving average 3 days ago, and now you're back. You had another pocket pivot yesterday, and now it's back. But, you know, who knows? This thing could be back to the 50-day line in a hurry. I don't know. Was there any news that caused this? This seems kind of weird. But, you know, sometimes you you close your eyes, you hold your nose, and you buy a stock. And I like to say a prayer, you know, though I walk through the valley of the shadow of death, I fear no evil, for the ugly duckling art with me. So, you know, you could try that when you see something come right to a possible area of logical support and see what happens. Whoops, give me 1 second here. And maybe you get lucky. That's why a lot of times when I'm watching the market come off like this, given the position here, I'm watching opportunity or watching out for opportunities on the short side where I think they might be, and I want to be aware of those. And I'm also watching my buy watch list because we know sometimes as things get very ugly in this market, that's where you want to be buying things and stepping in at logical areas of support. So, you know, all that's to say is, you know, maybe Mobileye pulling in here like this and looking kind of ugly here becomes viable on this pullback. Maybe it needs to go a little bit further. Maybe GoGo pulling back like this the way it is, it becomes viable on the pullback. GoPro, I think, is probably out the window. I don't like this. I don't like Facebook. Mostly like Cyber here pulling back, and it's pulling into the 10-day. Maybe it needs to come further down to the 20-day, maybe even down to the 50, depending on how deep the market goes into a correction. So what is your definition of an ugly duckling? I think it's sort of obvious. It looks ugly as sin, basically, and you would normally wouldn't want to touch the thing, and it looks gross on the chart.
By the way,
like
the reason
right here, see that right there? That's where you don't want to buy it, or even, you know, use your brain just a little bit, okay? You know, do I have to write up a specific definition of what an ugly duckling is? Yes, he has 6 withered feathers, a broken beak, and one non-webbed foot that looks like it has athlete's fungus on it or something. How's that?
By the way, on this Ambarella, the reason it was up like it was because of the GoPro earnings announcement.
Yeah, that could be
that caused them.
Good point.
And they're a key supplier to,
good point,
to GoPro.
Yeah, so that was probably it. So if GoPro dies, it's probably going to die too. I don't know. I don't trust this market. I think it looks crappy, and the thing that makes me most suspicious are the internals and what you're seeing in the individual stocks. Now, that said, like I said, you got to keep one eye on your buy watch list as they're coming in, because you might get a spot to pick something off, and that's basically how I operate. I'll trade in the short term. So my broker calls me a pattern day trader, but I was reading the definition of a pattern day trader, and I would say that I would have fit the pattern of it, or the definition of a pattern day trader for all 25 years I've been trading, because you don't have to do much to be a pattern day trading, and if you trade hard around core positions, you're going to be a day trader sometimes, or at least what they call a day trader. But to me, it's just another meaningless label. Microsoft is looking good on down days. Yeah, it's been moving higher, so I don't know. It's not something I would be buying. It's just a big old company. It have its move. You know, Cisco had a move back in here, and it's still trying to hold that. But you know, does it really go net go anywhere major? Not really. So I don't know. I'm not. If you want to buy Microsoft, go for it. But I'm not my type of stock. It's not going to have the kind of move where I can make big money. Alexion, is this another biotech on fire? Yeah, to the wrong, you know, flaming out basically. So it's breaking down. Yeah, you could have seen this as a short. Again, notice how it starts to look good, like it's going to break out. Okay, so you see some of these patterns in some of these stocks. They look like they're going to break out, but they're in an overall sort of weak or funky pattern, a late stage pattern, whatever. You keep your eyes peeled for potential failures, because usually those would be the quickest breakdowns. You know, look at how fast Apple is failing. Comes up this side, fails on a breakout, and it's coming in hard now through the 50-day. I don't know. Maybe you're going to undercut this low before you try and rally. But this is starting to break down, you know. And I heard one, shall we say, very vociferous pundit on financial cable TV saying that you don't trade Apple, you own Apple. And, you know, that kind of stuff is such BS. Because the bottom line is any stock you buy is ultimately... you know, unless you're going to take the stock certificate and put it in the trunk somewhere and leave it there for your great-grandchildren to find someday when they come and clean out your attic. Every stock you buy is a trade. and with the idea that someday you're going to sell it. If you're investing for retirement, as so many people are, but you have to be long term at all times, even though you may be retiring in 6 months. There does come a time to sell everything. So all these bromides and all this other BS that you hear is just nothing but BS. I can remember, Motorola was a stock to hold. Remember that, Dr. K? And Nokia. What happened to them?
Yeah, the Nifty 50. Remember? Well, some of you might remember.
Yeah,
Nifty 50
exactly. And they had their demise. And the new short selling book is out, and we talk about life cycles of stocks, and that's a major theme in the whole short selling methodology. And Apple will have its life cycle too. It's had several actually. I recently wrote an article on that. You've had several life cycles since 2004 where it's had big moves followed by big shortable corrections. So, I just think it's so dumb to tell people that you need to buy stocks and hold them for the long term. Like I saw another guy on another show saying, when Biogen was doing this, that, this is a stock you got to hold long term. Well, it's had a big move, and maybe it's time for it to top and come down hard. So if you bought it up here thinking you're going to hold it long term, now you're starting to feel a little bit of a screw sticking up a certain part of your anatomy at this point if you bought into this BS. And you can see a lot of people did, and a lot of people probably sold into it, the proverbial smart money. Someone says pattern day traders such stupid legislation and forcing undercapitalized into futures, where it's much more dangerous to be undercapitalized than in stocks. I don't notice that it has affected me per se. So I don't really know. Somebody that's in Kodak. Yeah, look at Kodak. That's another. But, Apple is a great company now. Maybe they're going to eventually have $1 trillion market cap. Maybe not. Maybe it's going to get cut in half first. And this new iWatch maybe is their, the ultimate parody of their own product line in a sense. So. Oh, let's see. Starbucks. There's a Bible gap up that becomes unbible. It's failing. Amazon's a similar sort of thing. I don't know. I'm wondering if these things aren't shorts. Google trying to come out of this big ugly. Notice that it's in a big sort of rolling sort of pattern, and you might say this is a cup with handle that failed, and now you've rallied back up to the breakout point, so it becomes shortable there. And you see the prior resistance up here. So that's what I'm looking at with stocks like, say, Workday. Same idea. You go a little past it, but that can happen. And just kind of watching this. I know it's news related, so that becomes actionable. I'm also looking at Yahoo. I think I was covering some shorts before we went off on a little tangent there. Yahoo became shortable over the last few days. This, again, see how it's starting to look good, and you notice it looks like once it turns, you get a pocket pivot even in there. I think right here, and it's starting to look like it wants to go higher. You see that in a stock like Workday almost exactly in terms of this move to the top of the range that takes you a little bit higher before it fails. So that's something to keep an eye on. CMG, that was a gap down. Again, see how it gets a little bit up there. It looks like it's going to turn around and go higher, and it stalls, and then boom, it collapses. And so you're looking at Workday here like that, okay? So, you put one and one together, you get a sense maybe this will do the same thing, maybe it won't. So if you can come in and try and short it, and you have a reasonable and very tight stop that you can use, or a reference point for such a stop, then I think that's what you can try to do. But this is the stuff I'm looking for here, okay? Let's see. I don't see any brilliant questions coming through, as we would normally have. What do we just have? Here's Yelp. See, now I remember some guy on TV telling everybody you had to buy it at 78, and this guy has a show, and he's on every day, and he crows about everything that he tells people to buy that goes higher, but he never ever takes accountability. And in fact, I think he was telling people to buy it here, so 80 something. And now look what this thing's at. It's cut in half. And you never hear about it after that, because you're supposed to buy it, and you're going to hold this long term, and it's going to have another leg up, and I know everything at the same time that I know nothing, and you just listen to me, and I never talk about when I screw up. And this sort of idea is very dangerous. But here you have another almost a shortable gap down, it looks like to me. You're breaking down, big head and shoulders. You see another one on the right side now. And there's like you draw a big neckline and it's going through that. And so this is where, if this was the 2004 book on short selling as opposed to the 2015 book on short selling, we'd be drawing a line here and going short here, rather than understanding that you probably had short sale points up higher in the pattern. And this was one I was shorting last year that helped contribute to a triple-digit return overall. So, but you can see, maybe I make it a little bit bigger, it's too small. You can see, it's still got a long ways it can go. Okay, look at that pattern. Why can't it go back down to 20? Why not 15? I don't see why not. Especially if we start to see, I'm noticing, is the 10-year up today? Are we seeing, are this market taking rates higher as it has been before the Fed? Dr. K, are you watching any of that?
I mean, the bonds are tanking again for the third day.
Bonds are tanking, so rates are going up. Yeah, so the market's already bringing rates up before the Fed does. So, I don't know, Bill Gross said something about they're going to raise a quarter point sometime in 2015 just to show that they can. Okay. Somebody says, okay. Someone says pattern day trader rules are irrelevant to those of other $25,000. So basically anybody who isn't really an extreme piker for the most part. So I got it. So I guess, if I ever lose all my money and only have $25,000 left, I'll remember that one. Somebody says, or asks rather, do you still look at the earnings and sales slowdowns to validate shorts? No. Why would I look at that? Stocks often top when the earnings and everything looks beautiful. So, there's no reason to really pay attention to any of that. A lot of times it's already slowed down for several quarters after the stock has topped for a considerable period of time. So, no. Somebody says, if you look at Alexion, the chart sucks, plus revenue and EPS crashed in the latest quarter. Well, the chart sucked beforehand, right? And it's probably telling you it was a shortable name. Let's take a look at that on the chart real quick here. You have a breakout here. It's beginning to fail. So, you have the first break on earnings. It was breaking down before, I guess, or after, I don't know. But it's now just starting to break down. So, in this case, sure, maybe you could have an earnings slowdown occur on one quarter before the stock completely tops, but you don't really need to. You just operate on the basis of the technicals, which in this case are showing you a major failure here. You can see the breakouts. Yeah, it's looking all beautiful here 6 weeks ago, I guess, 7 weeks ago. And you got a big volume move on a breakout, or it looks like a trend line breakout on this little base sort of structure off coming down to the breakout point here. And now it's blowing apart. So, it may just be getting going. Bonds and stocks and gold tanking. So that means that the Fed's going to raise rates. So interest rates are already going up. So I don't know. I think that's what's going to cause problems for the market. So I've been watching the dollar trade today, and it's been going higher against the yen, but the euro's been rallying against the dollar for the most part. But I think the dollar's starting to try to counter trend right now, but it's still kind of trapped in a range between 111 and 112, it seems like. And it could turn the other way against the euro, but it's already rallying against the yen. So I think it's indicating, and Japan's also indicated they're going to keep rates where they're at, which is they've been at ZERP for how long now? 40 years, 100 years, 500, I forget. But we're going to be like that. The Fed's not really going to ever raise rates. I don't think so. They can't. Market or the economy just stinks, and GDP numbers yesterday showed it. And remember, those numbers, the GDP numbers that the government reports, are wildly overinflated because they understate inflation by what is current inflation rates, Dr. K? What are they saying? 2%, 1.6% or something?
They're under 2.
Yeah, so under 2%. But anybody goes to the store, and I go out and I pick up my little basket of goodies, shaving cream and other stuff that I get every couple, 3 months, and I notice prices are increasing at better than a 10% rate year over year. And so real inflation is 8-10%, I think. So if they're overstating inflation by that much when they calculate the GDP number, because it has to be adjusted to be correct, it has to be adjusted for inflation. then you would, and that would be an adjustment down in a high inflation environment or increasing inflation environment. So you know if they're reporting or that they, pontificate about inflation, or let me just be frank, if they can continue BSing us that inflation is under 2% when it's really not, then you know the GDP number is also extremely phony. So it's a lot weaker than they want to say. So, but I like to sit in the afternoon and watch financial cable TV, and it's because it's entertaining for me. I just sit there and listen to what these morons all say, and it's quite amazing. But everybody is on the party line that the economy is improving. I heard one guy, commentator, saying that the U.S. economy is the only one that's at escape velocity to get away from QE. And I don't think that's anywhere near the truth. But they're constantly citing the party line standard government economic numbers, which are all phony. So you have to remember that. So it's a lot weaker than they say it is. And the Fed is essentially stuck. So now it's a question of whether ultimate or infinite money printing wins out against reality. So, and I think that's part of the struggle you've seen in the market so far this year. So, okay, let's look at a couple others here. BABA. Again, BABA actually got going as the market was making new highs. This looks, I talked about this a couple weeks ago, it looks like a head and shoulders and still staying in the right shoulder. So if we stretch it out a little bit, make it look bigger. And so, earnings come out, I think, any day now. Or did they come out already? Anybody know? In any case, thing rallies up, gets a pocket pivot here, looks good.
They're not coming. They haven't come out yet, but they will.
It's looking like poop. So maybe that's another short. Looked at Yahoo, looked at eBay, Qualcomm. I think I talked about this a couple of weeks ago. This is to me a short. This is what the pattern looks like overall. And it's just, you can see it's just a big, ugly, rolling sort of top formation. You got three waves down, then a rally, and it's failing again. Near the 50-day, it looks like a short, maybe using the 50-day as a stop, but it's better to hit it near the 50-day. That's another one that, to me, it looks like it's just heading lower. BABA earnings May 7th. Okay, so you got some time. It could go lower. I think it's a piece of garbage, and it's going. I think most stocks in this market are a piece of garbage. Baidu getting hammered, gap down. You see this sort of broadening, sort of zigzag. Look at this zigzag. I mean, this is crazy, and you're getting a good 10% either way. So you could, buy it, short it, buy it, short it, buy it, short it, buy it. This probably would have been better, but you know what I'm talking. You can see what I'm talking about here. It's a channel trader, and the thing just sucks. And now it's breaking down. But again, you're looking at this on a weekly chart here, and you can see the head and shoulders, and what you're getting this week is an increased volume week that's a big outside reversal to the downside. So, and you could start to see a lot of this stuff looking suspicious, definitely suspicious a few days ago, but Baidu, they came out with earnings, and that kills it. That's the case for a lot of these things. Look at LCI now, done. So where was the big move on LCI? When we put out the pocket pivots in here, as it's rounding about, you get a beautiful, wonderful, fantastic price move, and then here's the breakout in here, right around 60. And it really never goes that far. I guess you get about 15%, but you should have sold that if you were buying the breakout, or even, I think, if you had bought down here and you held it, using some simple rules, and that's the way you operate, I think you would have been okay, and you probably could have sold it after the 10-15% move after the breakout, because we know in this market, if you get a 10% move after a breakout, consider yourself lucky, and that's really been the case. Somebody says the way government overstates or understates inflation depending on what suits them and changes the definition over time is criminal. Exactly, I would agree. Do a similar thing as an accountant for any company asset and you will end up in jail. Precisely. The other major point to consider is that the government uses cash accounting. So they don't have to figure in all these forward liabilities that they have. Now, if I as a business owner file my taxes with financial statements that use cash accounting, then I could be subject to tax fraud, accusations of tax fraud, because I'm supposed to use an accrual method. Now, if the government used an accrual method, we'd be showing deficits that are more in the $7 to $10 trillion range. So, yeah, it's all just a big facade. So you have to consider that, can this much BS go on for this long? And at some point, when do the chickens come home to roost? And I think to some extent, if you have wealth, you have to be thinking about strategies to preserve that wealth in the event of a meltdown, and that includes things like having some hard assets and whatnot. I would say I have maybe less than a quarter of what I have in the stock market. So, and part of that is the strategies I have are designed to withstand something really bad. But you never know till you get there. So it could, all the money in the world, if you have it in whatever grain silo or food caches in your house or cases of wine in your basement that you're storing, or liquor or gold or silver or any other precious metal or any other hard asset, not going to do you very good if there are tanks rolling through your neighborhood, blowing everything in sight. How's that for a apocalyptic vision, Dr. K? Anyways,
not really.
whatever.
I'm very optimistic about generally the forward nature of things, in terms of where humanity's come from and where it's headed. But stocks don't go up in a straight line, and neither does humanity.
No, it definitely does not. And as I think it was Keynes, John Maynard Keynes said, in the long run we're all dead. Maybe the only smart thing he ever said, but that's kind of the way it works out. Anyways, somebody says just have to go to Baltimore to see blank, like you just mentioned. Yeah, I think all of that is indicative of what the world's become. Up is down, evil is good, good is evil. It's just kind of all twisted around. So, inflation, no inflation, or lots of inflation is no inflation. Huge deficits are a president who claims that he's lowered the deficit, the government deficit, spending deficit, by the most of any president before him, which is just totally shuffling the facts around under shells, and so you live in this Orwellian world basically, and you got to wonder when the jig is up. I don't know. It could go on for a while. So in the meantime, enjoy life, have fun, don't get bogged down too much in all of that, because the end will come when the end comes, and not a moment sooner. Anyways, that's all I've got for this week. You got anything to add, Dr. Kenny? Any brilliancies?
I think just keep your stops real tight in this environment, because we're not out of the woods as far as this sideways motion in the markets, sloppiness. It does seem like things are tightening up a little bit. When you look at the S&P or the Nasdaq, the S&P was just having a coronary from December to February, and now it does look like it is trying to get tightened and get some support here at 50 days. So we'll have to see how it rolls out. But in the meantime, MDM's on the buy. It's not shy to go back to cash, because who knows? If the sideways wants to continue, we could have a few more down days ahead of us. But in the meantime, it will remain on its buy signal, and hopefully we see some of these leading stocks find their footing, like we have in the past.
Yeah, I would have to say, if I have to sum up, my bet is we go lower from here. So we'll see what happens by the close. Anyways, but I think the bottom line is just keep it tight. If you're going to do anything, short or long, because even if you're short, things can whip on you pretty quick. We already know that. So, keep an open mind, keep a clear head. Look for setups. If you see them, you take a shot, but definitely keep your stops tight either way, because it's still a volatile, sort of trendless environment we could remain in. So, but I think we're going to go a little lower first. That's just my guess, Anyways, all right, everyone. Have a great weekend, and we'll catch you next week. Take care.
So long, everyone.